Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday, as we had a couple of things that met some entries and some that are still moving. So for those of you that are new to the channel, do me a favor, click that subscribe button. If you're a returning visitor, do me a favor, give me a much appreciated like, leave a comment on the section below, especially if you took any of the trades yesterday that we talked about. So let's go ahead and dive right in. So the S&P this morning, we're up about 10 points this morning after yesterday's big sell-off. So yesterday, when we were looking at this, was pretty early in the day, and we were right about here, and we had talked about the potential for this thing to continue to sell off, and that my belief is that there was no reason at all to get long on a bigger time frame, right? And that's exactly what the market showed us. If you wanted to get long, it would have had to been a breakout above here on the smaller time frame. But that opportunity never presented itself. So we saw the market have a humongous sell-off. We dropped in here, got a little bit of a rally early in the day, and then a big sell-off throughout the middle of the day. Before then, this long hammer candle here at about 2 o'clock, and we started to see a little bit of momentum get built up. Now, I will tell you, I ain't buying it. Every rally up, and I've said this now for a number of months, number of weeks, every rally is just an opportunity to get short. That's the way that I need to envision this market right now. I think that we'll get a little bit of a bump out of here, and it may come today on a small time frame if you're willing to get long. But I'm not willing to be a buyer at these levels. I just don't see the buying opportunity as being the better way to go. We may get a reversal back at this level right here, this 25.95 by 26.05 area, definitely around that whole round number spot, which, by the way, means that there could be money to be made on a small time frame from here up to here, if you believe that there's enough bullish momentums, right? So we are getting a little bit of a potential breakout to the upside from here with these higher lows, right? When you have these higher lows and roughly the same highs, you oftentimes will get a breakout potential come to the upside. My only issue with that is that there's a fair amount of noise in here that could stall that move. And so I'm not comfortable taking a long, and I've said this for a while, I'm not comfortable taking very many longs in this market, because the market has shown us not to do it, right? It's telling us, that we should be a little bit more cautious overall, and that's what we're looking at for today. So here's the reversal that I'm looking at for today. But if you notice, there's lots of reversals the price never got back to up above us, and that's very indicative of bear markets, right? In a bearish market area, you're going to have these pullbacks that are more violent in nature, and that's exactly what we're seeing here. So right now, this area here is what we've kind of fallen off of twice. I'm okay if you are willing to take the risk on a long up to this region, but then I think we could see a reversal back up in here. Now, this is not, this is the origin of this big move down. It's a little bit of a retest of this area to the left, but it also served as a little bit of a demand area back through here. So I think we could get a decent little reversal right on that one. In the NQ didn't get back to its reversal point either, although it came a bit closer. And so in the NQ, there's really nothing for me to do. I don't, I've got a level up here, but it's the same one that I have in the S&P. And frankly, I think the S&P has a better chance of actually getting filled this morning. We're up about 0.5% in the NASDAQ. We're up less than 0.5% in the ES, as the NASDAQ really led the sell-off yesterday. some of our swing equity positions performed very well yesterday because we're on the short side, right? Just maintaining that short side has been the way to go. Now, crude oil. So crude oil yesterday, we talked about a potential breakdown below this area here, and then that's exactly what we've gotten. So we've gotten a really nice breakdown in this area. If you took this breakdown, now is the time to take your stop and move it down to lock in a little bit of profit. If you took the breakdown below 49.43, if you move your stop above this red candle's high, then you've locked in probably 20 or so ticks, which is a decent little amount of money. But at the very least, what it does is it protects you from a whipsaw effect going back the other way. Not a bad way to go on this one. There is room for this to continue to fall, as we are seeing. This is the lowest price we've seen in oil in a while. We finally broke below that whole round number support of 50. So I think that could continue to go down. If we get a bit of a rally, there may be a chance to get short again. But right now, I'm back to being full bearish in crude. Gold is the opposite. So I've got a lot of lines in here in gold. So let me bear with me here for just a moment. Yesterday, when we looked at gold, and the reason I have a lot of lines is because it hit all of our targets that we had in place. So yesterday in gold, I talked about this little wick over wick area acting as resistance, right? We hit it once, we moved away. We hit it a second time, we moved away. The third time in, think about it, I use the analogy of the hand in the cookie jar. We eventually took all the cookies out of the cookie jar. What cookies did we take out? The sell order cookies, right? And which is why I have a blue line there. That blue line is indicative of a breakout. So that long breakout has occurred, and we've moved up about 11 points since that breakout. Stop was moved up to break even as well, which is why you see that red line in there. So now I've got to remove those areas and look ahead to where's my next opportunity. So, I still have a potential breakout above this 1256 area. We had this a while back, and price just didn't come back to it yet effectively. I can't take this breakout, though, above 1256 unless I get another bit of basing here. So if you get a little bit of basing before there and you didn't catch the breakout down here, you're going to get another bite at the apple, I think, up here, as long as we get the basing. If we don't get the basing, then it loses a lot of that probability. Now, you're also left with this here for a reversal trade. This reversal trade is still a very valid area, 1245 by 1243. If we get a pullback into here, let's see if we get a reversal coming out of it. Next, bonds and currency markets. So in our bonds, we did get a big rally up yesterday. To our ZN resistance has not broken through yet. So let's see if that resistance holds and we get a little bit of a pullback. I'd like to see some basing before I take the breakout. That's important. In the euro, we have we did come up to our level and we got a little bit of a move away. But then one of the things for those of you that are subscribers at Traders Army, we put in we have a private trade feed set up, and in our private trade feed we talked about taking your stop and moving it to break even. Now, why did we move the stop to break even? Very simple. When we hit the level for an entry, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 candlesticks. And we still didn't see very much price movement, right? My rule is essentially after 6 candlesticks, if I have no price movement, I want to close that thing out. And that's why this level failed. So I don't consider that a failure, right? I consider that, I'll take a stop out on a level that essentially wound up being a break even because I followed my rules any times that they come up. And that's exactly what happened here. So going forward, what do we now have? Well, I've got to move to the 4-hour chart. And looking at the 4-hour chart, I'm still in a sideways price action. So since I'm still in basically sideways price action, my choices are a bit limited. There's nothing in here that I'm absolutely in love with. And so what I'm going to do is just kind of hold off. Same thing in the Canadian dollar. I talked about this yesterday in the Canadian dollar. Now, the Canadian dollar hasn't sold off like crude oil has. So we may get a little bit of an opportunity to get short on a breakdown below this area here in the Canadian. So look to this for a potential breakdown based on the fact that we're doing a fair amount of basing above there, and the crude oil has broken down as well already. Great British Pound. So in the Great British Pound, we had a confirmation style entry set up right here for a potential opportunity. Price came into our level, and then we got and then we saw price come back down just a little bit and then pop through. So depending on how tight you set your entry, you may or may not have gotten filled on this. But if you didn't get filled on it, because then it would have canceled the trade. So this one is not sure, depending on how tight you set your entries. Everybody's going to have slightly different rules on this. If you go one tick outside the zone or a few ticks outside the zone, then you probably did get filled on this, and then it come back down and stopped you out. It's going to happen. You're going to get those stop outs from time to time, and that's exactly what happened on this British pound trade. However, in the Japanese yen trade, you should not have gotten the stop out, because this one blew right through that confirmation entry, and then it came right back to our limit entry, and it blew right through it. This is why I was speaking to somebody yesterday about the concept of curve and trend, and why they're so important to understand the difference between the two. A lot of people would look at where we are on that proverbial supply demand curve and say, well, this area appears where we should definitely reverse. And this area here is the origin of a pretty nice move down. However, the better origin is way the heck up here. This is just a bunch of noise in between the areas, which is why we've been unable to kind of hold those levels. Now, at the same time, we're seeing weakness in the dollar, right? And the weakness in the dollar is what's propelling a lot of these things higher. And so what I would probably look for today is, if an opportunity presents itself, none of these levels, I don't love the time of day any of those levels are formed on the 4-hour time period. I'd probably come down to this one here, which is my European market open. If we get a pullback into that range, I think that becomes our best bet, our best opportunity, somewhere in there. A little bit of basing, nice move right here, been untouched. This area was an area of supply, an area of resistance in the past, and there could be orders that are added to the queue just because of that. So something to consider. Copper, we had another copper confirmation style entry that blew right through. So these confirmation style entries are important. And then nat gas, these level I didn't talk about yesterday in the DMC, and I haven't really been talking much about nat gas. Nat gas opened up, gap down into an area that we had talked about a while back, and then was unable to kind of come back up here. I said that this is really your best opportunity to get short, and this is really where we're looking, is up here for a potential shorting move if indeed it returns to that level. So that being said, as far as today goes, your crude oil is running, your gold is running. Both of them are running out of breakouts. Your ES, I think, could be setting up for a small time frame breakout in order to get you another opportunity to short somewhere up in here. But if you've got any questions, please shoot me an email, support@tradersarmy.com. Thank you guys so much for joining today, and I will see you soon.